Nasdaq just made it official. The Canary HBAR ETF starts trading today, October 28, 2025. Wall Street can now buy Hedera without touching a crypto wallet, and analysts, they're calling for a 50 to 60% rally from here. But there's a catch. Nasdaq's own documents are flashing volatility warnings like it's a Black Friday sale on risk. So what's really happening with HBAR right now? And should you care? Let's break it down. Welcome back to the channel. If you're serious about staying ahead in crypto, smash that like button and subscribe, because we're diving into one of the most underrated moves in the market this week. Trust me, you don't want to miss this. According to Mark on X, Nasdaq officially posted the listing circular for the Canary HBAR ETF under ticker symbol HBR. This isn't a rumor anymore, it's live. The fund holds actual HBAR tokens in custody with BitGo, giving traditional investors direct spot exposure to Hedera's native asset without the headache of private keys or hardware wallets. Now, here's why this matters. ETFs legitimize assets. They bring institutional money. They create liquidity. Bitcoin didn't explode past 100K because retail investors suddenly got excited. It happened because BlackRock and Fidelity opened the floodgates. HBAR is now walking through that same door. But unlike Bitcoin, Hedera's been quietly building real-world utility while everyone was obsessing over meme coins and layer 2s. But hold on. Nasdaq didn't just celebrate this listing, they slapped a giant caution sticker on it. Their official document warns investors about extreme volatility. HBAR can rip your face off in either direction. This isn't a bond fund, it's crypto. And crypto doesn't care about your feelings or your portfolio allocation strategy. So, why would Nasdaq approve something they're simultaneously warning people about? Because regulation doesn't mean safety, it just means accountability. The ETF structure gives investors a regulated vehicle, but the underlying asset, still wild, still unpredictable, still capable of doing a 40% move in a single week. My take? This is brilliant. Nasdaq is saying, we'll give you the tools, but you better know what you're doing. Now let's talk about what's actually driving value here. Hedera isn't just riding the ETF hype, they're shipping upgrades. In mid-October, they rolled out HIP 551, a massive update that introduces batch transactions. Think of it like ordering everything on Amazon in one click. Instead of checking out 12 separate times, you can mint, transfer, and manage tokens in a single atomic process. No failed transactions, no half-executed swaps, just clean, efficient execution. Why does this matter? Because enterprises hate inefficiency. Banks, governments, and corporations don't care about decentralization memes. They care about speed, cost, and reliability. Hedera's giving them exactly that, and the market's starting to notice. Last September, Wyoming chose Hedera to support FRNT, the first stablecoin issued by a US state. Not Ethereum, not Solana. Hedera. This stablecoin is backed by US dollars and government bonds, and the interest. It's funneled into Wyoming's school foundation program. My opinion, this is huge. Wyoming didn't pick Hedera because of flashy marketing or VC hype. They picked it because the network actually works. It's fast, it's cheap, and it's governed by real institutions like Google, IBM, and Boeing. When a US state trusts you with public funds, that's validation money just can't buy. Now let's talk technicals. According to popular analyst Zayk, HBAR has been consolidating inside a descending channel for weeks, but he's calling for a breakout, potentially 50 to 60% upside if momentum holds. And guess what? As I'm recording this, HBAR is already up 15.6% in the last 24 hours. It's trading at 21 cents with a market cap of $8.97 billion and daily volume pushing 780 million. That volume spike? Yeah, that's not retail FOMO. That's institutional interest warming up. The ETF launch is giving traders a reason to front-run the next wave of capital, and with Bitcoin breaking new highs and the Fed likely cutting rates again, the macro environment is basically handing crypto a runway. Speaking of macro, HBAR's rally isn't happening in a vacuum. The entire crypto market just caught a tailwind after China, and the US reached a preliminary trade agreement. Risk assets are pumping. Liquidity is flowing, and with rate cuts on the horizon, money managers are hunting for yield in alternative assets. HBAR, with its ETF backing and real-world use cases, looks like a no-brainer allocation. But here's my contrarian take. Don't get drunk on hopium. Yes, the setup looks clean. Yes, the fundamentals are improving. But Nasdaq's volatility warning exists for a reason. HBAR could hit 30 cents next week or dump back to 18 cents. That's crypto. The difference now is you have a regulated product to trade it through. Use that wisely. One more thing. Hedera's governance model is underrated. It's not some non-dev team or a foundation controlled by VCs. It's governed by the Hedera Governing Council, companies like Google, IBM, LG, and Deutsche Telekom. These aren't exit liquidity providers, they're enterprises betting their reputations on this network. That kind of backing doesn't guarantee success, but it sure lowers the risk of a rug pull. So, where does this leave us? HBAR is entering Wall Street at the perfect time. The ETF gives institutions a clean entry, the tech upgrades give enterprises a reason to build, and the macro environment is screaming risk on. If Zayk's analysis plays out and we see that 50 to 60% breakout, we're looking at HBAR potentially testing 30 to 33 cents in the near term. But timing is everything. If you're waiting for confirmation, you might miss the move. If you ape in blindly, you might catch a correction. My advice: scale in, don't bet the farm. And remember, crypto rewards patience more than it rewards panic. Alright, that's the breakdown. Nasdaq listed the HBAR ETF today, Hedera's shipping real upgrades, and analysts are eyeing a major breakout. If you found this valuable, hit that like button, it helps more than you know. And if you want deeper dives into altcoins making real moves, check out my other videos. I've got breakdowns on other projects positioning for this bull run. Thanks for watching, stay sharp, stay disciplined, and I'll see you in the next one. Quick reminder, nothing in this video is financial advice. Crypto is volatile, risky, and can wreck your portfolio if you're not careful. Always do your own research, never invest more than you can afford to lose, and consult a licensed financial advisor before making any investment decisions.